Home values have skyrocketed, and while you still may have many years to go to pay that mortgage off, you may find yourself equity rich. Brandon Haefele, the CEO and president of Catalyst Mortgage in Roseville, here to explain what that means. Brandon, we take out the mortgage statement and the home values every month. We're like, oh, okay, that's nice. It's more than just a figure. You can really leverage this for your life.
You know, really, you're absolutely right, Richard. Right now, we have an all-time record high of equity with a record low interest rate, level. And so right now, homeowners can really take advantage of that equity, consolidate debt, credit card bills, potentially do some home improvements, and really put themselves in a better financial picture.
And we want to do this carefully. You don't want to just go out and say, okay, I want to get new cabinets and race the credit cards and then get yourself back in the same situation. So where do you suggest targeting it first? Paying off your home faster? Working on getting that garage door, kitchen cabinets replaced?
Well, I think that right now everyone needs to realize it's individual scenario. Everyone's situation is different. So for instance, if you're going to be retiring, it might make sense to pay off your credit card debt and get the lowest possible rate and buy down that rate so you're saving the most on monthly payment. Whereas if you have a kid in college, it might actually make sense to pull some cash out, go ahead and do a longer term. Maybe you only have 25 years left, maybe to do a 30-year term just to get that payment down. So every situation is different. But really, at the end of the day, if you have high interest credit card debt, even if you have a 2% interest rate right now, if you have high interest credit card at 17 to 22% interest rates, it really does make sense to consolidate that and take that monthly savings because you're going to save thousands per year in interest.
And that's going to help you long term. I think there's also a lot of new homeowners that bought over the past 3 years, 5 years, that they're going to really see that big difference, may have never refinanced. This would be particularly helpful for them if they're looking for that home project. Say they want to stay in their home. This could really benefit them.
Absolutely, and to your point there, even if you bought a year and a half ago, there's a very good chance with how much values have gone up in this area that you can actually refinance and drop mortgage insurance or get a better interest rate and drop mortgage insurance. And in a lot of cases, you don't even need an appraisal. So really, it's one of those things that even if you purchased a year and a half ago, it's really worth looking at today.
Things are changing, and it's not just, that you open the envelope, you see that your latest home value, and you think, oh, that's nice, can't do anything with it unless I want to sell. There's so much more you can do with that if you want to. Brandon Haefele, thanks for giving us the options this morning. I always love chatting with you about this important topic. Brandon, thank you.
Thanks, Richard.
All right.